Hello everyone. In this video, let's discuss about the Delhivery IPO. Is it worth to consider the IPO to invest? About Delhivery, it is a Gurgaon-based startup started in 2011 who does businesses on logistics and supply chain solutions. We can broadly divide the business into three, such as express parcel, truckload, and services. In case of truckload, we can divide that further into part truckload and full truckload. Then, in case of services, it is divided into supply chain and cross-border delivery. For FY 2021, 70% of deliveries revenue comes from express parcel service, which is nothing but, for example, if we order anything in e-commerce websites such as Amazon or Flipkart, delivery collects the parcel from the business and deliver it to the customer. So basically it is a business to customer operation. Then both truckload and services are business to business operation, which consist of 16.45 and 13.55% of revenue in FY 2021 respectively. Since Delhivery is always a loss-making company from its inception, it has to be evaluated based upon their growth story. If you want to invest in it means it is important to understand the Indian logistic industry. This is the generic Indian logistic market structure. In that, domestic transportation consists of road, rail and air. Deliveries 85% of the business is based on road transportation. Now let's try to understand the market size of road transportation alone. On FY20, the total road transportation market size is $124 billion out of $390 billion, which is India's total logistic market size. In that, only 5% is coming from organized player like Delhivery or Blue Dot, etc. The remaining 95% is in non-organized small players. 90% of the business was done by small truck owners who owned less than 20 trucks. The bar chart represents the projection of road transportation sector size and market size in FY 2026. As we can see, the road transportation logistic market size will increase at a CAGR of 8% to $200 billion in FY 2026 from FY 20's $124 billion, where all the organized players will increase their market size to 10 to 15% from 3 to 5%. So, if everything goes correct like I did in the last 10 years of company's lifespan, then the total revenue for FY 2026 will be at least 21,500 crore rupees. Let's see express delivery market size in detail. Since deliveries 70% of revenue is coming from this, and they hold 20% in whole express delivery market, it is important to understand it alone. Express delivery means in plain English that the delivery of parcels weighing less than 40 kilograms. These are typically an e-commerce orders through the websites like Amazon, Flipkart, etc. and it is expected to deliver in less than 3 to 4 days. In FY 2020, in India, there were total 150 crore e-commerce shipment was delivered, and in FY 2026, which is expected to grow at the CAGR of 33% to 850 crores a shipment. Captive means it refers to the wholly owned logistics of the e-commerce player. For example, Amazon got their own delivery channel in most of the places. 3PL means third-party logistics, which collects the parcel from the e-commerce player and deliver it to the customer, like Delhivery and Blue Dot business. Then about the market share. In FY 2020, captive holds 59% of the market and only 41% of parcels were delivered through third party. But in FY 2026, the market share of the third party is expected to grow as 46%. In terms of dollar value, for 150 crore shipment, it was $2.3 billion in FY 2020, and it is expected to be $10 to $12 billion in FY 2026. Again, for express delivery standalone, if everything goes correct like it did in the last 10 years of company's lifespan, then the revenue for FY 2026 will be at least 15,000 crore rupees. There are two types of business model in delivery business. Hub and spoke model, where all the shipment will bring to the central location or hub, then it deliver from there. Second one is point to point or mesh model, where a parcel travels directly from one location to the other without passing through any sort of central or temporary hub. Here, delivery uses the mesh model or the point to point model, whereas most of the traditional 3PL companies uses the hub and spoke model. Both got advantage and disadvantage. In hub and spoke model, the main problem is it is time consuming. Whereas in mesh model, the disadvantage is it is very expensive. That is capital intensive model, which required investment on warehousing and required to employ more people than hub and spoke, etc. In order to overcome this disadvantage, delivery is using a asset light model. That is, instead of buying trucks and warehouses, they lease it out mostly apart from some strategic assets. And they said they are and they will use technology to reduce the capital cost. In delivery's lifespan, they never made profit. If required, please pause the video and have a look at that. They always concentrate on growing their revenue or capturing the market by both organically or inorganically. Inorganically means acquiring the other small third-party logistics company. So it's very difficult to say that they grow their revenue by growing business or acquiring the other small companies. At present in India, within 10 years, Delhivery becomes the largest third-party logistic player by pushing the traditional players like Blue Dot, etc. Finally, Delhivery's valuation revenue. On March 2019, SoftBank invested in Delhivery startup, which makes it as a unicorn company. They invested approximately 2,860 crore rupees on the valuation of 10,500 crore rupees. At that time, their revenue is only around 1,700 crore rupees, which gives the valuation to sales ratio of 6.2. On May 2019, again Fidelity, famous US investment firm, invested approximately 2,200 crore rupees on the valuation of 22,000 crore rupees. Now, in this IPO, they are giving the fresh issue of 4,000 crore rupees worth of share for the valuation of 35,200 crore rupees, which is only 5.4 times of valuation to sales ratio. So, I personally think that the valuation of Delhivery IPO is fair as long as they grow at the same rate in the 10 years. I understand Blue Dot and TCI are cheaper valuation and they are making profits, but they are not growing like Delhivery. Again, this is my opinion only. Please don't take it as it is. Please do your own analysis before investing. Consider subscribing the channel so it will motivate me to do more. Finally, disclaimer. Thanks for watching.